Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In today's market, we are seeing again uptick for the Dow Jones Index. Remember, the Dow recovered all of its losses and recorded very modest gains, but the fact is that the Dow Jones recovered its losses. That was the biggest news. Now, if you see the chart, the Dow Jones chart from a weekly time frame perspective, you can see that the price is still within the range of the highs and lows that we've experienced last week, but we are still only, today is Tuesday, so it's a long way to go. But the momentum explains a very different story when we look at the S&P 500 chart. Why? Just look at the chart for yourself. You can see that the S&P 500 index has already crossed above the last week's high. So this confirms that the Dow is still a weaker index, and the S&P 500 index is definitely keeping its momentum, maintaining the coronavirus stock market rally. Now, what are the factors that are really underpinning this momentum? Well, for the Dow Jones or for the US futures, they are picking the momentum from European markets, where we have a clarity about this fiscal stimulus that has been put together by policymakers within the Eurozone. Great thanks to both France and Germany to bring together this fiscal monetary policy, because without that, there were enormous amount of questions that if Eurozone can really pull together a united front. But with this particular measure, the message is clear. The Eurozone has the ability to raise a collective debt. Now, under the current circumstances, this amount is going to be over nearly 750 billion euros. Out of these 750 billion euros, nearly 290 billion euros will be given as grants, meaning you don't have to return those funds. And guess which countries are likely to get the most amount of grants? Of course, it is Italy and Spain. So that means that we've got to keep a very close eye on the FTSE MIB and IBEX, the Spanish index, because this is where the grants are moving to, and the remaining 360 odd billion euros will be given to the companies, but in terms of low interest rate. Now, of course, again, that amount will be distributed to the rest of the Eurozone countries as well, but a larger or a mammoth portion is again diverted to Italy and Spain. Why? Because these countries were adversely impacted by coronavirus in comparison to the rest of the Eurozone countries. Now, as for the US, the entire focus is pretty much on Washington, because this is where the second stimulus check or the second stimulus bill or the second stimulus package is being discussed by the Republicans and the Democrats, and of course it is Congress who's going to make the decision. Now, US Treasury Secretary wants to save jobs. He wants to have more help. He wants to have more funding. And remember, more funding means more help for the US corporates, and that means higher stock market in the coming days or in the coming weeks. As I said yesterday, as long as we get a green light, even whether it's a $1 trillion worth of stimulus package, still that is a mammoth amount, and that is likely to continue to push the stock market rally higher. But for the Nasdaq and the big tech earnings, it is still a very much positive. The days are still very green, and all positive gains are still coming in, and then the big tech companies are clocking those gains. How so? Just look at Amazon. Jeff Bezos literally added 13 billion US dollar in one day yesterday to his network because of the Amazon stock that increased enormously yesterday. But it is more about the coronavirus vaccine. So Pfizer is one of your stock that could again see enormous amount of volatility because of a potential vaccine. And another stock which is also likely to see higher volatility is your Moderna stock. Again, there is a vaccine story there. That's all for today. See you guys tomorrow.